All right, guys, I want to upload a video, kind of cover a different asset class. This one, probably a lot of people are familiar with. Most people drink coffee. This is the Coffee C Futures July 2022 contract. It's on ICE US, Intercontinental Exchange. So this is just, a good macro overview of the coffee market. So the Coffee C Futures contract is the Arabica beans or Arabica. I'm probably pronouncing it wrong, but it's the most commonly grown type of coffee, and on this very professional exchange. So, if you were a major coffee producer or farmer or any commodity company that has is naturally long coffee beans and product, you would this would be a product you'd go onto on the intercontinental exchange and to hedge your positions and take trades and manage your risk. And so a lot of the biggest players in these commodity markets are these, I think Starbucks would have a trading desk because they're naturally long coffee all the time for obvious reasons. And some, depending on what the market's doing, they need to hedge that risk. So they would have a trading desk, and other major producers would be in here and taking trades based on what they see. Now, if you this may not be great for coffee lovers because their coffee is getting more expensive, or pretty much along the lines of every commodity really since the March 2020 expansion of quantitative easing. But coffee is no exception to that. So it's been in a steady uptrend, and yeah, I mean, you know, that's probably a trend, a macro trend that is, it can reverse here and there, and you have periods of pullbacks and different retracements. But just that general macro trend that you see in commodities, going up in value is probably going to continue for the near foreseeable future. So, you really don't want to get caught in a situation where you're constantly creating positions that are trading against that macro headwind. You really want to be creating positions aligned with it, and then maybe hedging those positions depending on what the market's doing and what the market structure is doing. And in this case, you may have a situation where this rally we may be seeing signs of a little bit of slowing down on coffee futures. So we're looking at a weekly chart, and the reason why it doesn't go any further back is because it's the July 2022 contract, um, which is about 3 months out. But so anyway, you see this big rally, right? And it starts to get a little parabolic here, and but then we see a little bit different. We see behavior changing up here. So this right here is not a great look, especially after this this major run up. You come up here, you run liquidity above here, and then you come back and slam down below these lows. That is not a great look. I mean, of course, the macro could take over and the commodities could just keep rising upward. And but just from a structural TA standpoint, I don't like this look. I don't like this break of structure here. Um, you didn't really get a dramatic close below there, but you did break it in a pretty dramatic fashion. This week trades up, then comes back, trades down below it again, following up, and then we see a little bit of a rally off that level. So that would be the way I'd be framing this big macro swing on coffee futures. And I would be really looking for a move down into this region here. You see this big impulsive move up, right? And essentially, if this breaks down and starts collapsing, I would be looking for something in this region around there. And I'm sure if you drew a 618 here, probably see, yep. So the 618, that would be your golden pocket, roughly somewhere in there. Again, this is macro level, so um, price could come down there and spend time trading around there for weeks or even months, um, and then finally give a reaction. But we don't want to get too far ahead of ourselves. Right now, all we see is the break of structure here, and so we're just so after we see that on the weekly time frame, then we kind of have the a little bit more context to go down to the daily, and we can go down to the daily and see here that you know. So while it broke structure on the weekly, we have this pretty dramatic break of structure here, but then the daily also is breaking structures to the upside. So that's kind of the situation where you might have a little bit of a macro stop run. You know, the price comes down below here, and then the daily runs up above these highs right here. That's a situation where this could start to look like a macro stop run, right? You got your higher low, then your higher high, but again, you just want to be careful in this level because of things have changed around. So the market could be running above these highs to generate liquidity for a move down. So, if we are framing along around this perspective, then we want to be very, very serious about managing risk at these lows, right? Because if if price comes back down and takes out those lows, then you get that scenario where you do get the dramatic retracement, and you don't want to be caught in a long bias holding on to that type of trade if the markets are doing it. And commodity markets can trend very hard, right, in one direction or the other. So you really want to have a good feel for that and not stand in the way of that move. But yeah, we get a little different reads on the weekly and the daily. If we go down to the 4 hour, 4 hours is essentially saying the same thing the daily's saying. Let's go down to even a very low time frame chart. Okay, so we have our break of structure on the daily level, right? We run up above these highs, but whenever some old significant highs ran, I always want to be cognizant of the possibility of a swing failure pattern. And what would a swing failure pattern look like? Well, essentially, we have this, high that is a daily high, right? Even though we're on a 15-minute, we analyze that as a daily high previously. And so you want to go down here and look at this low here. So 225, mark off that low. So this is the low where the price comes up, tests this level, but doesn't break it, sells off a little bit, comes down here, and then the bids come into the market right here at 225.2 and run up above these highs and run the liquidity above these daily highs. And that's very significant because you use this level to distinguish if this is a swing failure pattern. So if price runs the old significant highs and then starts selling off and running below these lows that created the impulsive move to run the highs, that's when you start to get the swing failure pattern confirmation. And we'll just leave that on the chart. Go back to the daily. Right. So, and it's also confluent with the daily low of April 1st. That's funny. Structure broke on April 1st. So is it an April Fool's joke? Who knows? We'll need to keep paying attention. But yeah, anyway, if price comes down and runs the April 1st lows, then I start to look at this as not so much a break of structure, but a swing failure pattern. And then I'm looking much lower, down here. And then again, if these lows break right here, then kind of the macro idea that we had of this being a macro structure break at this low starts to play out. So you can see these levels on the macro chart, right? Trade below 225.15, look for a little bit of smaller retracement. And then if you trade below, we mark these lows off here, but it's roughly this weekly low down here. If you trade below the last week of March's low, then that's a situation where you don't really want to be long in that position. And hopefully, if that starts to happen, so essentially, if this does confirm a swing failure pattern here, we'll go back to the daily. This is the level where volatility can really pick up. You really get those liquidations and that cascade, but you want to be in your position before then, right? So if price comes down, confirms a swing failure pattern here, that's when you want to somewhere in this region build your short position, right? Because you want to have that position before the volatility picks up. Again, I'm sort of at a risk of getting a little bit too far ahead of myself, but I'm sort of framing things in the context of what I'm seeing on the weekly chart, right? Seeing this massive run up and then a break of structure, and kind of contextualizing how I would, navigate that break of structure on the lower time frames, and see how things work out. Um, of course, anything could happen. Again, this what we're seeing on a structural level on the weekly chart is a little bit different than you know the macro tailwinds that are behind the commodities market to just go up. So there is that conflict, and that it diminishes a little bit of your edge. But again, price is price. What we see in the weekly chart is what we see in the weekly chart. So if you're taking a macro look at this market, you sort of have to have a little bit of a bias to the downside, or at the very least a retracement of some sort. Anyway, that'll do it for this video. Again, if you like this content, please just like the video, subscribe to the channel. This is macro analysis of a different asset class, and I'm going to be doing different videos covering different asset classes, to try to stay true to our channel's desire to cover a broad range of asset classes. So stay tuned for those uploads, and I'll catch you in the next one.